Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. Happy Thursday to you. I hope you're having an amazing day, regardless of the circumstances that we're going to take a look at here. And, obviously, hope that you are very, very well, you and your family. Now, before we get started, just so you know, in case you're new to the channel, which I get a lot of new viewers, I'm not a financial advisor, but I love teaching people to trade. So this is my goal. My passion is to help you become a better trader. I created a website with an academy, community, and signal group. So if you're interested in checking that out, CryptoCache.tech is a site, link in the description below. And what you can do, of course, is let me know if you work in the military or perhaps you're in a third world country. I'd be happy to offer a discount for that as well. So message me direct if you'd like. Only use contact information in the comments. I will never directly message you, okay? Please be aware there's a lot of scammers out there that try to impersonate me. It's flattering, but it's terrible. So regardless of that, let's take a look here at Bitcoin, see kind of what's going on. So pretty standard stuff, I guess you could say. There was, I believe, minutes that was released yesterday, and perhaps I believe also a Fed meeting today. I'm not up to 100% on that, but I know there's something really, there's blood in the water, basically based on that simple sentiment there. When there's Fed meetings and things of that nature, things tend to kind of happen. And that's exactly what we saw with this candle wick down all the way to about 28,000 even. So we're still in this channel. Keep this in mind. We're still range bound between 28.7 and 30,500. But with that candle wick down, that does imply that we may see a continuation to the downside here. I was expecting the price to come down a little sooner, and I was surprised it came back up as high as it did. So I do still feel there's an inevitability of the price action continuing to come lower. That said, of course, we got to wait for the one-day candlestick to close to kind of see what type of pattern we're going to be seeing, of course, because yesterday it was almost a gravestone pattern, and that does kind of signal a reversal. But again, today's kind of almost the opposite. We got to hammer up, and it's a kind of a different story. But again, candlestick hasn't closed, so we don't even need to jump to any conclusions, and the day is still young. There's a lot to be said here today. Just a quick note here: the traditional market is up 1 to 2%. So ultimately, that should have a positive influence on things and perhaps increase the price. But once again, there's a lot of things in the market that we just truly can't expect or anticipate just yet. All right, let's go ahead and go back to the monthly and just kind of reiterate some obvious. We're underneath the, nothing's changed here really. It's effectively the same thing, but we got two red months effectively, and we're also under the 20-day set moving average. Now that we're under the 20 and above the 50, we should be range bound in that range, which is a pretty large range. But what that is, it's about 21,000 upwards of 40,000. So for the next 5 to 6 months, I anticipate the price going as low as 21,000 and upwards of 40,000. I know that seems like such a wide range, it's kind of crazy, but if history repeats itself, we should see 1 or 2 more red months, followed by 3 or 4 green months to break back up above the 20. The 50-day SMA has notoriously worked as a strong support level, so just bear that in mind. Another thing that also is kind of disadvantageous but not super important on the monthly is the RSI breaking below 50. I think that will be short-lived, but generally speaking, anytime we've seen the RSI touch under 50 in the past, it's never, it's taken a little while. And in fact, here's a better example of that. This little guy here, where the price comes under 50 in the RSI, that's almost exactly the point in which we're at right now, okay? So right here, we dropped below the 20, we're right above the 50. It took about 3 months for the price to average itself out, and then 2 or 3 months later, it's back up over the 50 in the RSI. So when I say it's not a problem right now per se, it's too early to tell. This candlestick hasn't closed yet. The month isn't over. It's getting close. But if we were to go below 50, it would make sense because it would almost essentially follow the same exact scenario back in 2019 or 18-19 range. Okay, so again, almost fulfilling the 4-year cycle. It's like 3.5 years later. So generally speaking, that's kind of where we're at for the monthly. The weekly is effectively a similar scenario. We're close to the 30 on the RSI. That should effectively bounce. I believe if we look at the previous data, it was pretty darn close to that level as well when we dropped below. Yeah, we can see right here, RSI was at a very similar level. So for the most part, if we get an RSI on the weekly that's close to 30, you can expect a bounce. It's rare to the downside for the price to ever go below 30, at least so far for Bitcoin with the way in which it's progressed over the years. It'll exceed 70 a lot, as we could see here. It's done that a few times with those parabolic increases. We may even see that again later this year or next. But for now, truth reality is We are 9 weeks into this bearish divergence. We're getting almost exhausted, and I would say within the next month or two, once again, we should see that start to level out. We look at TD sequential, of course, it's going to tell us we're at 7, but if you count all the candles, there's basically 9 weekly candles, all the way down, obviously from where it's at. I think it got stopped out about 48,000. So 48,000 to where we're at now, obviously not great, down to the 28,000 range, but what I'm getting at here is we should be nearing the bottom, but keep in mind the bottom isn't where we're at right now. It's probably closer to 21 to 22. And so just kind of be aware of that and be mindful. We will likely hit the 21 to 24,000 range, just kind of as a rough estimate. But for right now, just note we may experience some kind of reprieve in the next 2 to 4 weeks once this kind of comes to full fruition. But it's still on its way down. We got to acknowledge that there's nothing really telling us it wants to turn around. And if you look at the moving averages too, you can see that the 200-day sub moving average trending right about 22,300. As that continues to work its way up and the price averages itself out sideways, it will inevitably bounce off somewhere in the range of about 24,000. Again, that's just speculation. There's no guarantees in that, but moving averages have a tendency of being very telling in a lot of ways, especially with previous data and the fact that we're kind of almost repeating what we did 4 years ago. So just something to be mindful of. And then, of course, taking a look at the daily. Well, we'll just go ahead and get back on here with the daily. We're looking at, of course, still underneath the 20. Okay, so back until we're back up above the 20-day sub-moving average, there's not really many moving averages we can say are really supportive and helpful, minus that big gap between the price now and 21 to 22,000 with the 200-day SMA on the weekly and the 50 on the monthly. Okay, so again, not fantastic by any stretch, but again, depending on what happens in the next couple of days, we can get up over that 20. Perhaps we might see somewhat of recovery, but I think that might be a false positive, and I wouldn't really bank on that, if that makes any sense. What I would bank on is the fact that this is a descending type of pattern, and it's essentially creating a resistance level. So there's a strong chance we're going to see some resistance here soon, and the price could come down lower. Again, if it breaks above, all well and good. We still got another massive trend line to get back up above, which is again concurrent with the 50-day SMA. The 50-day SMA, in my opinion, is a much better moving average to be above on the daily, because the 20 is a faster moving average. It does give us some really good benefits on larger time frames, but the smaller you go with the 20, the faster it responds to the price action, and essentially it doesn't necessarily work as well as a 50-day simple moving average. So to me, getting back up above the 50 will be the pinnacle of that potential turnaround we should start to see. Okay, until we get there, let's not celebrate or do any type of premature anticipation that it's going to just moon tomorrow. The likelihood of that is extremely low considering the market. We've been range bound for almost 2 weeks now straight at the exact same average price of 30,000. It's a really, really interesting place. We haven't seen this kind of price action in Bitcoin in a long time, and it's just I wouldn't say concerning, but it's not great, so we just kind of got to come to terms with that. Okay, so moving on, RSI, MACD, we don't need to worry too much about that. We've talked about that previously with the previous hidden bearish divergence. We've also got on the 4-hour here, price below both moving averages. I don't think that should be anything relevant, honestly, just based on the fact that we're just, the moving averages are sticking right in the middle of this price action. So it's if history is any indication of the last week, we should expect the price to come up to 30,500 and come back down. That's essentially what we're expecting. This is basically a range trading. So for the most part, you buy when the price comes down and bounce off support, and you sell when it bounces off resistance. Again, that's easier said than done, of course, because it's still doing a lot of knee-jerk reactions and some weird candlesticks. So oftentimes, stop losses can bite you in the tail. In fact, sounds strange, but we've been taking low position sizes with no stop losses lately and having a lot of good luck with it. And it's funny, the one time I'll use a stop loss recently, for example, got stopped out, turned right back around and hit its target. So you got to be careful with your stop losses right now. I would say very, very loose or not at all, obviously depending on your position size and what you plan to do. But generally speaking, this is more of a short market, I would say, and I think you're more likely to find some profits to the downside here in the immediate future, just based on the way that things are going. But again, it's once more a little too early to tell. If we take a look at TD sequential here, I don't think we're going to see much. We're at a 3 here. Looking at the RSI, we're kind of getting rejected off of 50, and the MACD is just kind of null and void for the moment. really cannot, you can't rely on some indicators when the price action is squeezing itself like this here. Typically, it's just trading patterns and scenarios in which the price will continue lower. And you got to understand that with the price coming down like this, coming over, that's kind of a flag type of pattern or a pennant pattern where the price action will inevitably decrease because we got this strong shelf at 30,500, and it just doesn't seem realistic that it's going to break that anytime soon. All right, so taking a look at the 1 hour, let's go ahead and call it a day after this. TD sequential tells us we got a nice strong reset. We wicked all the way down to an 8, and we're back up to a 3. So hypothetically, we got somewhere in the range of about 7 to 10 more hours worth of continuation back up before it reaches an exhaustive state. And as I'd mentioned previously, we are making lower highs. So if this next high cannot be higher than at least 29,800, probably more so realistically 30,200, then we're not going to be in a good position. For lack of better terms, we get a candlestick close today under 30,200. That would be disadvantageous and essentially not what we're looking for. Even though it would close a green candle, we're still not making those higher highs and higher lows. We are effectively, again, lower highs, potentially here, of course, and then definitely lower lows. Okay. So the stark reality of this is that it's a channel down, and it's going to continue to channel until it breaks that, until we see a higher high. That's what we're going to expect. So for now, it makes perfect sense as to where we're at. That's why I took a short position recently, confidently. I was surprised it came up this high, but in truth, still making lower lows and lower highs, and those are things we need to acknowledge. And that's really another reiteration of the fact that we're still in a downtrend. Short-term time frames telling us we're in a downtrend with these indicators here, or more so, not even just the indicators, just specifically standard trading techniques of seeing higher highs and higher lows, or in the inverse here, lower lows and lower highs. So when we see that, we got to understand that there's a lack of buying pressure and there's more selling pressure. That's exactly why the price is coming down. Until that changes, again, we should not get in this position where I'm going to buy low and sell high. Long positions right now are very risky. So please take caution with them. Use tight profit targets if you do. And of course, make sure that you adjust your stop loss accordingly, because these candle wicks are happening a lot more and getting a bunch of liquidations, okay? Furthermore, mid to long term here, we really don't have a leg to stand on. There's nothing here showing us that there's any reason for the price to recover in the immediate future. So again, if we compile all the data, that's exactly what you do as a trader in general when you're looking at technical analysis. You're building a case as to which direction the price is going to go. Short term, it's going down. Midterm, it's kind of averaging itself out. Long term, more macro, it's absolutely on its way down, fulfilling a bearish type of pennant / flag pattern. Okay, so we've really just got to acknowledge that. And truth be told, we probably will see a price point lower than 27,000 or 26,700, which is the low on Binance, effectively. So when we do see that, just be prepared and ready for adding to your position at that point. Again, not taking a low, not buying low and selling high, adding to your position for your long-term investment. Because again, Bitcoin will recover eventually. It may take months. Hell, it might even take years. We don't know specifically. But if history is any indication of where we're going, we should have a strong likelihood of returning within the next, I would say, 6 to 12 months minimum. I don't think it'll take that long, but once again, price point of sub 30,000 seems to be a point in which people are trying to invest. There's a lot more long-term hodlers out there right now investing in Bitcoin for the moment. The only reason why the price hasn't increased, of course, is because all the crazy nonsensical stuff going on in the world right now, okay? So try to just take that with a grain of salt and be happy and healthy. Those are all very good fundamental skills of being a good trader. And essentially just make sure that, you take care of yourself and be cautious and careful, So that's the main reason why I like to make these videos. Thank you so much for watching. I hope you did learn something here today. Comment below if so. If not, that's okay too. I know it's a little longer, but I just kind of had to say some stuff today, right? If you want to become a better trader, once again, CryptoCache.tech is a site, link in the description below. We've got over 200 active members right now. It's a really amazing experience. I look forward to working with you. Have yourself a great rest of your day. We'll see you in the next one.